Okay. Thank you everyone for joining us today. My name is Molen, who's the Managing Director of Brandmore Chartered Accountants. So just about us, we are registered tax practitioners. We are a dynamic and professional accounting firm based in Midrand, and we also have branches in Zimbabwe and UK. We actually call ourselves accountability partners, as we live by these on a day-to-day basis. So we live by that. That's why we call ourselves accountability partners. So some of our services, we do secretarial services, consulting, your business process, performance management setup, your internal audit, your payroll services, human resource services, tax services, and accounting services. So we are a bouquet firm where we specialize in various services for the companies that we serve. So just to add on that.
Are you looking for a trusted partner to enhance your organization's internal controls and ensure compliance? Welcome to Brandmore Advisory, where we specialize in internal audit, risk management, governance, and performance management services tailored to your unique business needs. Our team of experts is dedicated to providing comprehensive internal audits that identify inefficiencies and uncover opportunities for improvement. We help you navigate complex risk landscapes, ensuring your organization is prepared for any challenge. With our governance services, we strengthen your decision-making process, promoting transparency and accountability at every level. Our performance management solutions empower your organization to achieve its goals by aligning individual performance with strategic objectives. Join the many organizations that have benefited from our tailored solutions and expert insights. Choose Brandmore Advisory for a brighter, more secure future. Visit our website at www.brandmore.com or contact us at 011-0263-052 to learn more. Are you looking?
Okay, thank you. Welcome everyone to our webinar today, where we are going to be talking about budgeting, and these are our objectives. So at the end of the seminar or at the end of this webinar, we are looking at achieving the following. We need to find out what is budget and why it is important. So just a note, I'm not alone, I'm with my team. So feel free to interact on our chats, ask questions, anything that will help you. I have yes or here, and also Shane with me. So feel free to interact with our team. So today's objectives is, we have, I think, three key objectives that we want to achieve out of this webinar. So we want to understand what is budget and why is budgeting important anyway, and also understand the key components of budgeting and the common components of budgeting, common mistakes or areas where people always make a mistake. We have live testimony that we're going to also share from us helping our clients. So those are the three key objectives there that we want to achieve today. But before we just dive deep, we just want to get to know you. So there will be a poll that is coming up. What title best describes you? So just take 1 minute to just fill in that so that we just understand who's in the room. If you're on our chats as well or on our platforms, because this webinar is being recorded on all our social platforms, feel free to also type on the comment. And who are you? Are you a business owner? Are you an accountant? Or are you other? That is not, that you cannot describe. So feel free to just say that. So I think for now, we have 11% business owners and we have accountants in the room. It's very important. It's good that we also have accountants, and we have 22% that can't disclose, that is other, that feel comfortable to put on other. Okay. I think I'll ask you to close the poll so that we can, yeah, if 11% business owners and 22% is, okay. Okay, so the subject of the day, as we said, is budgets. Budgets is a very critical tool, and just to introduce, a budget is a comprehensive financial plan that outline income and expenses. So it's actually a tool, I call it a tool, to achieve your financial goals and minimize financial stress. So a budget is a planning tool. And that planning tool actually help you to outline what is coming in your business, what is going out of your business, so that you will be able to plan ahead, and you have so you'll be able to meet your objective or your goals as a company. So it's a very important planning tool, your budget. So why budget? Someone might say that even as an individual, when you're budgeting, you can say you are gaining control. You understand your spending habits. You actually know that what I'm getting and where is what I'm getting going to. So you are gaining control. So sometimes some people, even if you are an individual, you might get paid, and all of a sudden you don't know where the money is gone to. So that means you don't have control of your spending habits. And also budgets. Why budgeting? Setting goals. You have to see, are you achieving your short and long-term financial objectives? Because a budget is a financial planning tool as well, so which will help you to understand your short-term, your long-term financial objectives. It also helps you to make informed decision, prioritizing spending and saving, because you need to make an informed decision. You can't make a decision without a base. So a budget is your tool or your base of making those informed decisions. Also, on my definition, I said it's a tool for achieving financial goals so that you minimize financial stress. I can tell you, and I can guarantee you, many people face financial stress because of finances. So money, if it's not budgeted for, you can be stressed as an individual, as a company. So a budget can actually help you to reduce the financial anxiety, as it promote peace of mind and financial security, because you already know what's coming in and you already know what is going out. So it's very, very important to understand that this tool can actually help you to have a peace of mind and help you it actually reduce the financial anxiety, because money is very problematic, whether you have it or you don't. Sometimes you have a lot, but you don't know how to spend it, and stress can kick in. Sometimes you don't have it or it's limited, and it can actually be stressful as well. So it reduces budgeting, reduce the financial anxiety. So very, very important to understand that. So for just to introduce the types of budgets that we have, I know we have people that have said they are other, which means it's not an accountant. You're not an accountant. You're just an individual wanting to understand the budget, the budgeting, because it cuts across whether you're a person, whether you're a company, whether you are whoever. So budget is for everyone. For personal, you need to look at your household expense, your individual savings as well, and actually your debt repayment, because you need to be able to know, are you going to service this debt? So if you don't budget, you find yourself not being able to do that. And that financial stress that I spoke about can actually creep in and affect you and your family. As a business, you want to know your revenue projections, your operating costs, your profit margin. Very, very important, because you need to understand that as a business, what are we getting in as sales? What are we getting in, and what are the expenses and that we need to incur for us to get where we want to. So it's very important. And also, let's say you don't have a business, but you do projects. A budget is also can be a plan project specific, like your event planning, marketing campaigns, your product launch. So let's say you are focusing on launching a new project, a product. You need to know what is required of that, so you can do a project specific budget as well. Then obviously for non-profit organization, you do your non-profit budgets, your government budgets. I know the budget speech is coming up this month of February. So look out for the blog that we are going to summarize key things that is going to come out from that budget, so that you know, especially in South Africa, you know how the budget, the government is expecting to spend on the economy. So those are the types of budgets as well. So let's look at key components of a budget, right? So a budget, you want to identify two key things or three things. First of all, identify the income sources, right? Where are you expecting to get money? If you're an individual, you're saying, obviously, you're going to get a salary, or maybe you have some investments, you're going to get your interest coming there. So know your core business revenue. If you're a company, maybe it's coming from sale of goods or even services or subscription fees or consulting fees. So you need to understand your income sources. And also, apart from your core business revenue sources, you might also need to deep down, do I have any other revenue streams? If you have investments as a company, you have your investment income. If as an individual as well, or you have invested in property as a company, you have your rental income, or your affiliate marketing, you are in partnership with different organizations, and there you are getting some income there. So you need to have your core business revenue. Then you go to other streams of revenue, which is your other income. Then you go, sometimes you might receive grants or subsidies if it's applicable. So you need to know where is your income coming from. Identify, first important thing is the identification or identifying the income sources for the organization or for the company. So from there, you need now to estimate. We're talking about the income estimation now. You need now to say, okay, how do I then look at how much am I getting from my business sources or from all these streams of income? So you need to look at the historical data, right? Analysis, review past sales trends, because that's your core business. So you should be able to know how much are you getting and where. So you need to historical data analysis, review your past sales trends, your seasonality, and actually market conditions as well. And apart from your historical data, because things change, the yesterday might not be the same as today. So you also need to look at your market research, analyze the industry trends, competitor analysis, and potential market growth. Don't say last year we got 4 million by doing ABC. Maybe the market no longer needs your service. So you need to contact a market research. Whatever I'm thinking I'm going to get, according from the historical data, is what the market wants as well. So you need to analyze the industry trends so that at least your income estimation is accurate. And also you need to do sales forecasting, develop realistic sales projection based on the market demands, like what I said, and the marketing efforts that you are going to put in. So maybe you would have looked at last year, for example, last year data analysis, and you have seen the marketing research that this year, this year my clients need this. And then you need to analyze the trends. And after that, you now need to say, how much effort as a business are we putting to be able to get where we want to? So which means your sales forecasting. You also need to do scenario planning. This is a very important component. You need to consider the best case scenario. If all things are equal from what we are talking about, this is the result. And also, if on a flip side, if things change, what is the worst case scenario? So you need to understand that. And also, you also need to look at the most likely scenarios for your income. So you need to do scenario planning when you are doing your budgets. Very important. Very, very important there. So also, you also need to look at accounting. You need to account for fluctuation. Factor in you in as a business And when do you get what? Your economic downturns and also your unexpected events. I know many times we don't really, or businesses don't really plan for hectic downturn events. That's why we saw a lot of companies closed during the 2019-2020 pandemic, COVID pandemic. So you need to account for those economic downturns or fluctuation or unexpected events. Very, very important. Then after you look at all those, after you look at your historical data analysis, you do your market research, you develop your realistic projection based on the demands and the efforts that you are going to do, and you have done your scenario planning, you have catered for your accounting fluctuation, then I'm sure your estimated income can actually be a bit accurate. So that's the key component number one. We spoke about the income is the key component. Look at the sources. Main business, any other sources, you need to factor that in. Another component is the expense. So under expense, we have what you call fixed costs and variable costs. So as a business owner or as a business leader, you need to be able to understand which expenses fall in where. So you have your lease, your rental, which those fixed costs are expenses that doesn't change or that doesn't vary with the number of or the activities that you are performing within your company. So your rent is your rent, your office space is your office space. You're gonna pay that whether you didn't make sales or you made sales. That is a fixed cost. Your salaries and wages, your employee, your payroll taxes, that's a fixed. You know already if you have 10 people, you have 10 people. So those needs to be paid on a monthly basis. Your electricity, your water, your internet. So those are your fixed costs that you need to put in to categorize under your expenses as well when you're doing your budgets. So we have those insurance, loan repayments, which means your principal and your interest payments on the business loan or even any other taxes or property taxes if you own any property. So variable costs, very important. This is the element where people don't really look into detail on variable costs. Fixed costs, you know that they're not going to change regardless of what's going to happen, because contractually you have already said you're going to pay 15,000 per month for your rent. But variable costs now, we have found out that sometimes when you are now doing budget, people forget to say, no, we said we want 2 million worth of sales, but they forget now to factor that in the cost of goods sold. That means if you want 2 million, you need to buy things or raw material that equal to 2 million. So it varies with depending on the activity that you are doing. So variable costs can be your raw material cost, your inventory, your sales and distribution, marketing and advertising, like your online ads, depending on to what extent do you want. Because some ads will say pay per click. The more people click, the more you need to pay that kind of advertising. So your research and development as well, your travel and entertainment, business travel, clients entertainment, it depends. If you are having 2 client entertainments, it costs that. If you're having 3, the cost goes also up. So it's very, very important to understand your fixed cost and your expense, your variable cost under expenses as well. So the other component, we spoke about the income, the expense, the other component that is very critical that many businesses don't factor in when they're doing their budgets is the savings and investment component. So business savings is very important. You look at business savings from, for example, you made a profit last year and you need, we call it retained earnings from accounting terms. So this is the profits that is reinvested back into the business for business growth. So you need to budget to say, okay, how much are we going to retain for business growth? And also budget for the emergent fund. Always have a 3 to 6 months of operating expenses to cover for any unforeseen events. When an unforeseen event happens, you should not run dry, completely dry, because it means that you didn't budget for that. Even as an individual, even if you are earning 2,000 rand, for example, worst case scenario, you need to have to put at least 10 rand aside for any emergent fund. But this, because it's emergent, we don't think about emergency, but emergencies are going to come, especially in business. There can be something, a policy can just change. We can see what's happening in the world right now. So if you don't budget for the changes, even on a countrywide level, we don't budget for the changes that are going to happen in America when a new president, or now there's Trump, when something happens, that will impact. So we need always to budget for that and have an emergency fund as well for any unforeseen things. So capital expenditure as well. If you are looking for growth, you can't wake up and say tomorrow you need equipment. Let's say you are in a manufacturing and you say you need equipment with this when you didn't budget for that. So funding for major purchases like equipment upgrades or expenditure need to be taken into account. So this is the component that many organizations, from our experience, we've seen that they always, most of the time, they don't take into account this. And we also need to have, so this is savings, business savings, then also investment goals as well, growth and expansion, funding for new products lines, market expansion or acquisitions. If you want to grow by acquiring new other firms as well, you need to budget for that. Long-term sustainability, ensuring that the business can weather the economic downturns, because economic downturns are going to be there. So we need to always look at investment goals. Long-term sustainability. Is your business sustainable? Especially the business that are starting up there, that's where the problem is. If you're not there today, is it going to be sustainable? So you need to budget for long-term sustainability as well, or even budget for any economic downturn, so that if something happens, you're not going to be affected by that as well. Honor reward, providing a return on investments for those shareholders. Yeah. So before I move on to the next one, how frequent do you draw up a budget? So let's just hear your thoughts there. How frequent in your company or in your business or as a person, how frequent do you draw up a budget? Let's hear what people say. Okay. Okay, 50% saying bi-monthly, 25% quarterly, yearly. Some people are saying yearly, they draw up the budgets yearly, 25%. So we have 50% that are saying bi-monthly, and 25% quarterly and yearly. Okay, so that's interesting. Yes, so it depends. As if you're an individual, you find it better to draw up a budget monthly. But so if you're a business as well, you find it better to draw quarterly. So there's no right or wrong answer. Just wanted to see how frequent as an individual or as a business you draw up budgets. So some are saying bi-monthly, 50% quarterly and yearly. So as a company, you actually need to have a yearly budget as well. But of course, you need to review that budget as often as possible. Very, very important. So let's look at the steps. Let's say you have understand the budget, you've understand now the components and what you need to look at when you're doing the budgets. Let's look at the steps in budget preparation. First of all, you need to do goal setting, define clear business objectives. If you go to our YouTube channel, we were talking about strategic goals planning last 2 weeks ago. We did a webinar around, very interesting, go watch that video as well, around strategic planning. So within your so the budget now, it helps you or to show for you to achieve that strategy that you have set up. What is the financial muscles or financial needs for you to achieve that, right? So you need to, first of all, before you prepare your budget, goal setting. If your goal is to increase revenue, you need to set specific revenue targets. For example, 10% increase in sales within a certain period, maybe you are going to say within a year. And also maybe when you're defining, you're saying we want to improve profitability. And you know profitability has two components. It's either you need to increase your sales or reduce your costs. So increase profit margin by reducing either the cost or actually increasing the efficiency. So also market expansion, maybe you need to enter new markets, open new location, or a product line. So if you have a clear goal and you've set your clear business objectives, when you're now doing your budget, it needs to reflect there. You cannot want to expand, but in your budget, you don't take into account that you're going to have increased rentals. You're going to have increased salaries. You're going to have increase in all those kind of things. So product development is well. Let's say you want to launch a new product. You're not launching a new product or a service, or you want to enhance the existing offering. So those kind of things, your financial budget now needs to support your clear business objectives. Operational efficiency as well. If you want to streamline processes, it means on your budget, we are expecting to see software enhancement, things that align with streamlining your process. Or if you want to improve customer service, maybe you didn't have a customer service department, we need to see someone coming in. So if you have if you set your goals clearly, if you have defined your clear business objective, that's number one, the first step in doing budget preparation. Set your goals as a company. What is it that you want to achieve this year, so that at least you'll be able, your budget will be supported by that. After you set your goals, you now need to do data collection. Gather your, remember we said we can also look at history. Gather your financial documents. Look at your income statements. Look at your balance sheet. Look at the cash flow statement or sales records. So if you have like a system that always kept your sales records as well, or your management accounts. If you want to increase sales within a product, you are gathering the information so that you can have a base to start from. So expenses report, your detailed records of all your business expense. So you are gather your financial document. Also now you also need to look at your spending from month on month, so that at least you'll be able to look at the expenses that you have incurred as well, especially from your income statements. So you can make use of softwares like QuickBooks, Xero, or a lot of accounting systems. They can actually help you to track your spending for a month or two. So gather financial documents, especially if you are starting from scratch, or you are starting, maybe it's your first year to do budgets. Even if it's not your first year, you still gather your financial documents, so that and if you are not sure of that, you need to start tracking your expense to say, is it in line with what we are going for, maybe for the month or two. You need to also monitor key performance indicators like your sales, your customer acquisition costs, your customer lifetime value, and you need also even to analyze your spending patterns, identify areas you are overspending, so that you can see areas where you can cut costs. So this is the analyzing, data gathering. So you actually data collection here. Then now you are now drafting your budget. You need to create a budget template. You can use a spreadsheet or the softwares that I spoke about. In that now, you now categorize the components that we spoke about, your income, your expense. Please don't forget your savings or investments. So income and expense, within the categorization, that's where we always find a problem. You find that a person will say, we are going to have 2 million sales. Where is the 2 million sales coming from? But you find out that this maybe it's a retail shop. They don't identify that it's going to come from these products, So here, that's where the work is. Categorize your income and your expense by the product or by the service that you're offering. You need to go into detail. If you have 5 products, you need to estimate the revenue that is coming from each and every product. Costs by department as well. e.g., if you have your sales, your marketing and production. So it's very, very important. Don't say, no, our cost here is our expenses are 2 million. Which department is consuming that? You need to go back into detail. If you can even look at the product as well, to say which product is costing us more to sell. So those are the details that you need to look at. You look at your fixed cost versus your variable cost. We spoke about that. Then develop now a clear budget structure, whether it's monthly. If I always like monthly, especially because we are accountants, we do monthly management accounts. So if you have a budget already, we put it in, we analyze the actuals versus the budgets as well. So monthly, quarterly, or annual budgets, periods. So detail the line items for each and every expense category so that it will be able to make a decision there. So after you categorize income and you develop a clear structure, you need to allocate funds to each category. When you're saying allocate funds, you are now estimating to say this, we want 2 million from sales, but this 2 million is coming from selling of water, from sale of this, pay your service or your products. Then the cost related to that, then you are now prioritizing the way your funds is going to be spent. If you want to expand, you are saying, no, on our expenses, marketing is going to consume maybe half of our funds that we are allocating to our operational expenses. So allocate funds to areas that support the strategic goals. So you had a strategic goal of expanding. So which means more funds need to be allocated to support that strategic goal. Consider past performance as well. You have to always use historical data as a starting point. And because history is always important, that's why we shouldn't throw away our history at whatever cost every time. So you need also to adjust the allocation based on the analysis. Allocate more funds to higher growth areas. You see, the challenge that we always face as well when we're helping clients is, you see that this product, if you follow us and you follow our content that we post, we are posting nuggets these days. If that product is not making sense, I actually remember my brother doesn't know that I'm going to say this. I always say, no, if your business is not working, leave it. Think about something else. Don't continue allocating resources to something that is not working. If the past is showing that it's not working, leave it. So you need to allocate more funds to high growth areas. So build in flexibility as well, allow for adjustments based on the changing in market condition. So very important, this part is very important. It's also contingent planning, right? Always budget for unexpected expenses. There's natural disaster that can happen. Think worst case scenario. Someone was telling me, always when you're planning, scenario based, worst case scenario, best case scenario, most likely scenario is going to happen. So unexpected expenses can come in and creep in. So you need to budget for that. Natural disaster, economic downturns, recessions, the market fluctuations. So when you are looking at the market conditions, that's where you drill down to your products, to your product or service that you're offering. You say, what if with the rise in technology, what if I'm no longer needed in the market? Does that mean my sales is going to reduce? So you think through. You are always ahead as a leader, as a CFO, as a business owner. You need to think ahead so that at least you see. So you need to look at unexpected expense, economic downturns, recessions, and all those kind of issues that might happen within the business. Technology issues, equipment failures, cyber attacks is at the rise right now. I actually wrote an article about risks, business risks. So if you follow us, you can see that article on our platform as well. So in market demand, very, very, very important, especially for entrepreneurs. We are always ambitious. We are going to grow by 75%, but you don't go back into detail. What if the market demand suddenly shifts in consumer preference or even competition? People are seeing that things are going well and everyone wants to do exactly what you are doing. So shift increase in competition. So you need to have that contingent plan. Your budget should reflect the reality. Don't be over ambitious. Allocation of percentages, well, setting aside a specific percentage of revenue, typically maybe 5 to 10% to unforeseen costs as well. So regularly reviewing and adjusting the contingent fund. So this is like your savings that I spoke about when I was starting. Always have a contingent plan for your business. So what are the methods and tools and techniques for budgeting? Manual, if you need a spreadsheet to start off or something to just see and enhance, not a complex one, because we always tailor make our budgets per client, but we do have general and generic ones. If you need a spreadsheet, just drop in. Our team can send you a sheet there. Just drop in your email and we can send you just a spreadsheet to start off. If you want to budget expenses and all those kind of things, we can drop us that your email. Then our team are going to send you that. So this is manual method. Excel. You can use Google Sheets and customize for your own, and the advantage, it's very affordable. You don't need to buy, it's not a tool, it's just Excel. It's readily available, allows you to easily track as well progress and make adjustments. But the limitations can be time consuming to set up and maintain. So you actually need some knowledge of some spreadsheet functionality for it to be quicker. So our spreadsheet, I think it's formula driven already. So you'll be just capturing, when you capture, pre-populate your profit, when you capture. So that's it. That's a simple spreadsheet that we give the clients that's at certain level. But if you are at a growth and we need to tailor make that budget for you. And you can also use budgeting softwares. We have Sage, Zero. This is comprehensive solution for managing all aspects of business finances. The advantage is automated from when we're talking about looking at the data from prior years. So it's already there. So you have a base already. Automate many accounting tasks. You can also have your invoicing, your billing, and your base can actually be pulled from there. And limitation can be expensive, especially it can be expensive for larger business. You need bigger systems like you said, Itact. You can't do QuickBooks Zero because you want to track. And so depending on your size, we can actually also look at that for your business. So some of the techniques is zero-based budgeting. So zero-based budgeting, you are starting from zero when you're budgeting, starting from like zero, like its name, zero-based budgeting. Every expense, so every expense must actually be justified and approved. So which means if you are doing zero budgeting and you have departments, you are giving your leaders a blank sheet. Go do your budget from zero, right? So they need to now adjust, they need to justify why is it that they need that particular budget, or why is it they're expecting those kind of expenses for the company to incur such expenses. So it's zero-based. So the benefits of zero-based, I like it because it gives people it it eliminates the thought of saying, what if we reduce this or whatever? You are starting from scratch. It and eliminates unnecessary spending, right? Because you are budgeting for things that you are thinking they need to be on this budget. And if there was something before that was just there for being there, but you're starting from zero. Eliminates unnecessary spending as well. Encourage careful evaluation. This is the reason why I like it. Encourage careful evaluation of expenses, and it promotes efficiency and cost effectiveness. So those are the benefits of zero-based budgeting. Then the other technique is incremental. So from the word incremental, you are increasing from something, which means you have a base. It starts with the previous year's budget. What did we budget for last year? And then you adjust it based on the expected changes that we said we need to look at. So here you need to look at, it's also relative, the benefits relative, quick, easy to implement, because you have a base already. You are just saying, you need to adjust, you need to prove that why are you saying 10%, put the thoughts into your percentage and provide the baseline as well, because people always want a baseline for budgeting, for easier. But if you want to see whether someone can budget well as a leader, Start with zero budgeting so that at least you can justify everything. Okay, so at this time, I'm just going to call in Hazel to. Hazel is one of our accountants, and we have been doing budgets for some of our clients. So Hazel, I just want you to just tell us you can put on your video on. You can just tell us, how did you find the process of budgeting? What are the challenges that you encountered when you're helping clients with budgeting?
Sorry, I'm having a bit of a. Okay, here we go. Okay, thank you, Marlon. So in our work with clients, we actually recently prepared a budget for a business that wanted to scale its operations. And in that process, we uncovered that there are a lot of things that, people tend to overlook, as well as how deeper financial thinking can improve the planning. That's also something that people tend to overlook. So I'm just going to go through some of the things that we noticed during this process. First being how revenue drivers impact costs. One of the first things we addressed with this client was breaking down their revenue drivers, because we saw that they set targets without fully analyzing the components that contributed to them. So we had to examine their pricing strategies. We had to examine what actually the procedures that were bringing in that revenue, so that sales mix, how they were going to acquire the customers and how they were going to retain and repeat, their business. And then another thing that we noted was how sales and their volume, the amount of sales and the volume that is required to achieve the revenue goals. They hadn't really thought about that properly. So you find that when you're budgeting, setting the revenue is the revenue target is not enough. We have to calculate how many sales will be needed to meet that goal. And that means we have to analyze your conversion rates, your marketing spend, and your operational scaling as well. There are a number of other things that we noted, but I'm just going to leave it at those 2 points for now. Thank you so much, Marlon.
Thank you, Hazel, for giving us that live case study. I know you are always doing the budgets for our clients and looking at that and try to tell them. But I know after analyzing like the case study that you have said, it made the client to think through deeply, to say it's not only that we need 10 million, but we need to know where is this 10 million coming from and how are we going to raise it. Thank you for that. Hazel. So on this slide, I just summarized the common challenges that we face when budgeting, and how to actually overcome. One of it, most importantly, is the underestimating of expenses, right? So you find that's why people are like, no, we're not meeting our budgets, but did you estimate the costs that are needed thoroughly before, right? So for you not to do that, you need to track spending meticulously. So you need to implement robust expense tracking system within your organization. So first of all, you need to implement that tracking system. Always track, utilize accounting software. Actually, we don't take a client that doesn't want to be on a system, because it actually disservices us to do manual things. No more manual. You need to utilize accounting softwares or even spreadsheets or dedicate expense tracking apps so that you know how much are you spending for what. Also, you need to categorize all expense. Track expenses by department, by projects, by product, if it means that. And the third thing that you need to do as well, so that at least next time you don't underestimate expense, because it's a common challenge when you're doing budget. You need to conduct a regular expense review. I feel like we're supposed to have a poll here. How many people actually do an expense review? I know we didn't have that. Regular expense review. How many people do analyze spending patterns and identify areas of potential overspending? So we have actually embedded that to our clients every single month, 30 minutes. If you're not available for 30 minutes with us, because we're not bookkeepers, we are accountants for growth, accountability partners. You need to understand what are your spending patterns, and are they helping the objective of the company? So always also do bank reconciliation and credit card reconciliation, ensure accuracy. Identify, do you know, someone was telling me they work as well for, I don't know, finance houses or something like that. If you need to be able to reconcile your debts, right? You might be shocked that you think that your loan is reducing and it's not. So you need to review, ensure the accuracy, and identify those each and every month, so that at least you don't have leakages around. And also, you need to do a review and adjust your budget regularly. So track spending meticulously, review and adjust your budget regularly. Contact monthly. I actually prefer monthly and quarterly budget reviews. Compare actual spending to budgeted expense, so that you say, why did I budget that we're going to spend 1 million here, but now we spend all of a sudden 2 million? So it's an indicator for decision making that is either you didn't budget properly, or you are overspending without even looking. Your leaders are not even looking at the objective, and they are not matching what is required. So you need to have that monthly management accounts that is comparing your actual to your budget. Analyze variances as well, investigate significant deviation budget, and identify the root cause. That's the beauty of management account. As a manager, as a leader in the organization, analyze those variances. Why are there variances in here? Make necessary adjustments. If you saw that you have under budgeted, make necessary adjustments, so that at least you update your budget to reflect the actual, what's on the ground, the spending and the changing in market conditions. Also, you need to incorporate lessons that you've learned. Use the past budget performance to improve future budget forecasts. So it's very, very, very important. So one thing, underestimating of expenses, it's a common error or common challenge that we've seen. Then the other one is unexpected cost, not being budgeted at all. So for you to avoid that, you need to build an emergent fund. Establish a dedicated business emergent fund. Even if I'm not talking about people who are making billions. Do you know that the big companies, that you say big companies, they actually fall short of this? It's shocking. You see that big companies, big firms, big businesses in debts, because they are not doing the right thing when they are doing their budgets. So you need to build an emergent fund, establish a dedicated business emergent fund, aim to have at least 3 to 6 months. If your business is incurring 50 billion costs, 50 billion times 3, 150 billion should actually be in your emergent fund for sustainability. So regularly contribute to that emergent fund. Allocate a portion of your profits, or set aside a specific amount each and every month, and invest the emergent funds conservatively. One thing that we pride ourselves is we look after businesses. So like, for example, now, this one, they said invest the emergent fund conservatively. You need to choose low-risk investment options to preserve that capital. So we are in partnership with a company called Enga Capital, where we send our clients, after we do the books, we say, no, you have funds that are lying around. Let them invest this for the growth of the business. So also you need to explore insurance options as well, because those are the causes that can really affect the unexpected costs that can come. Insurance, we actually playing big in the insurance sector. So if your company doesn't have insurance, when we are sitting in management accounts, we say, hey, we see that your property, your equipments are not insured, because expected events are going to happen. then you need to insure that. So property and explore those insurance options. Business interruption insurance now cover losses due to unforeseen events, natural disaster. There's that hailstorm. Imagine if you, in logistics, you didn't even insure your cars and that natural event happened. It would disrupt everything. So you need to explore insurance options that cover the loss for something, because if you lose something, it's a cost. So there's now cybersecurity insurance, protect against data breaches, cyber attacks, and other cyber threats. And this is on the rise. So each and every company or even businesses need to look out for that, so that at least you can reduce the unexpected cost. Professional indemnity, if you are a lawyer, I know we service a lot of lawyer, doctors, and or even other services, professional indemnity insurance to protect against claims of negligence or malpractice, because sometimes you didn't see it. You have team, they work on a report and something happened. So those unexpected things can happen, and they can happen in the business. So those are the common challenges, unexpected costs, and that may happen as well. And common as well, seasonality. You need to create a buffer in your budget. When you're budgeting, you say, when do you, some companies, you say that January is quiet. One of my brother's business, January is quiet, no sales. So when you're budgeting, you know exactly. You're not going to be surprised each and every year you complain about January, because you know that January is quiet. So you need to create a buffer in your budget for those seasonal changes in it. Develop a cash flow budget, a forecast, predict future cash inflows, right? Cash flow, we're talking about cash, money coming in, coming out. So you need to be able to develop that forecast, maintain an adequate cash reserves. We've spoken about that. Ensure sufficient funds, 3 to 6 months to cover for your operating expense during periods of low income. Negotiate as well for those seasonality flexible payment terms with your supplier. So these are the things that you can do. Explore alternative funding if you are to grow your business. Consider lines of credit, partnerships, and etc., so that at least you can fund your operations as well. The other common thing that we have seen is people say, no, we are in this sales, we sell this XYZ, but you don't look at diversifying income streams. Very, very important as a business. Look at exploring new products, lines, and services, so that you can actually even expand into new markets or offer complementary products. Develop new revenue channels. Consider online sales, subscription models, or affiliate marketing, so that at least you can be able to get some other things, especially when season change. You know that this product is not doing well, but the next one can actually do well, right? So we have a poll. Do you need help? Do you need help crafting a budget for your business? Let's have that poll up. Do you need help to craft? I'm not saying, I'm talking about a budget that is a meaningful budget, not a spreadsheet where you say, oh, I need 50,000. A meaningful budget. Do you need help for that? I see that 50% of our participants say they said yes. So please feel free to drop in an email to Hazel. Hazel is in the meeting, or anyone who has the Brainmore tag, or if you're online, feel free to go online and book a one-on-one, even free session with us on our website. Can be able to help you there. So 60% need help to craft their budget, which is very, very important. Yes. So just to conclude, the practical application business budget for forecasting revenue and expense, you need to set for setting prices, managing your inventory, and securing funding. This is the use of a budget. If you want to have something, they will ask you for. If you want to secure funding, they will say, let's see your plan. Your plan, they need to see your budget. What are you anticipating to get? And also it's used for making informed decision, executing new projects, and expanding. So monitoring and adjusting, I think we've spoken about that. You need to track your expense, measure your success. I'm a fan of performance management in all areas, in business, in every area, you need to actually manage and track the progress there, and also review and revise. So I'm just going to ask, we have 3 minutes left. Any question? If anyone have a question, then we can answer that before we wrap up. So if I can have one question, if yes, or there's any question, because I can't see the chat, you can just say that. Or else you can just contact us as well. Ask for any questions. We can have a discovery session, free discovery session, 30 minutes with you. Then we can help you there. Any questions? Is there any question on the chat here, so?
There aren't any questions on the chat. I'm just going to give it a bit more time though, just in case somebody's still finding.
Okay, so if we are on our platform as well, I think someone is looking after our platforms. If you have any question, just type on the comment section. If we can't answer you now, we can always answer you there. So, okay, thank you very much. Our next webinar, which is very, very topical, we are hearing a lot of questions around beneficial ownership, is going to be on the 27th of February. I think we also have another one, strategic. I think we are doing part 2. I'm not sure. We'll also, please keep on checking our site. So this one, we're going to be having a webinar with in collaboration with Sikunyana Attorneys. So they are, it's a legal firm. We're going to talk and deep dive into how to comply with the new beneficial ownership. A lot of companies are being deregistered as well. So we'll talk more about that. So please dare us that. And you can actually, I think on the chat, they've dropped a link to that to register, or you can actually go to our sites to register for that. Thank you very much. I hope you got helpful tips from this presentation, and you're going to grow your business. You're going to be intentional about growing your business and looking after it. Thank you.